What's up guys, welcome back to my channel. In today's video I'm going to break down top-down analysis, what it really means, how important it is, and how I personally use it to align with the market instead of fighting it. A lot of traders lose money not because their entry is bad, but because they ignore the higher time frame and react emotionally with the lower time frame now. So if you ever asked yourself, why did the price reverse when my setup looked perfect? Why did I get stopped out before the move happened, and why did I keep over trading? Then this video is for you. So let's get into it, guys. So what is top-down analysis? Top-down analysis is analyzing the market from the higher time frame to the lower time frame, so you can trade with context, not confusion. Instead of jumping straight into the market and going to the 5 minutes time frame, 15 minutes time frame to look for entries, just like you know already, I even trade higher time frame. I don't even use the 5 minutes or 15 minutes. Sometimes I even share my analysis on the 15, 30 minutes, and I didn't even get the analysis from that 30 minutes. I trade from the 1 hour time frame, 4 hour time frame. So the main time frame that I watch is 4 hour time frame and 1 hour time frame. But a lot of traders trade 15, 5 minutes, and they make money. But when trading with those lower time frame, you get to find yourself having multiple entries instead of focusing on the higher time frame, so you can get quality trades that you can take than using the 15 minutes. The higher time frame is stronger than the lower time frame. In a scenario when the higher time frame price come back to the higher time frame, let me use 4 hour as an example, and it's already tapped the 4 hour time frame, let me say in a buy market, and you're still on the lower time frame trying to look for your entry, and you're trying to sell off from there. Let me say you have your sell set up when price have already tapped into the 4 hour time frame zone for it to buy, and you're seeing a sell setup within that zone, because with the lower time frame you get to see a lot of noise, which makes you being able to see a lot of entries that you should not even be on the trade, but you find yourself being on it because you trade the lower time frame, which is not nice, guys. So that is why this video is really important, guys. So think of it this way: higher time frame your map, lower time frame GPS. Without a map, GPS won't save you, right? Correct. So a lot of beginners traders, they trade just one time frame, which is not nice. You need to use your time frame. That's why it's there. Your 4 hour, your daily, your weekly, your 1 hour. You need to use them, right? That's why they are there. So you need to use them. New traders, they chase price, enter trade with no higher time frame bias, overreact to small moves. All those things make them lose money, trading just 5 minutes, 15 minutes, because it moves faster. They have a lot of noises there, alright? But you need the higher time frame to really direct you, to know what you're doing, yeah? So if you're really fun with lower time frame, you also need the 1 hour, 4 hour to first thing, understand the direction of the market, what the market is doing, right? Knowing if market is taking highs or lows, before going to the lower time frame to know if following the direction, if market is buying or selling, right? But to me, I only trade 1 hour, 4 hours, so I don't really pay attention to the noise. I just stick to the higher time frame and trade like that, right? We all know that the market is fractal. Structure exists on all time frame, right? We all know that. But higher time frame dominates the lower time frame, which is correct. Dominate the lower time frame, meaning that a daily bearish chart can easily destroy 5 minutes setup, right? Top-down analysis help you stay patient. It reduces over trading. It makes it improve confidence, and it help you trade fewer but high probable setup because you are using the higher time frame. So guys, on higher time frame, it helps us identify our major swing high and low, where we'll be able to know where our swing high and low want to be respected, or the high want to be respected for market to continue to the direction of either buying or selling. So guys, let's move on straight to the chart, and let's get and see how this market has been moving on the chart. Alright guys, straight up to the chart. When we say top down analysis, we mean top to down, right? So currently I'm on the daily time frame, and on the daily time frame, if we zoom in like this, you can see we'll be having a series of higher highs and higher lows from 2025. In the daily time frame, we have a series of higher highs, higher low, higher highs, higher low, higher highs, higher low. We currently have a higher low, and what should we expect on this market? We need another higher high like this, because we are trying to follow the trend of the market. We are not trying to trade against the trend. We need to always follow the trend of the market. What we're saying on the market, that is really what we should focus on and try to follow it, right? So now, on the daily time frame, we already know that we should continue looking for buys, right? So let's move down to the 4 hour time frame now. And on the 4 hour time frame, you can see when we have this higher low. Well, let's go back to the daily time frame. Let me show you guys something. You can see that market has already swept a liquidity on this daily time frame, which is this liquidity right here. This liquidity right here. So market is simply reacting from this algo structure right here, which is down below here, and you can see it's currently pushing to the upside, right? Correct. That's what we have. So this, from this move right here that we have from here, we are trying to look for this high, meaning that from here now, from this low the market has currently tapped, we are trying to look for this target. So this low already has been respected on the daily time frame. We're saying that this low has been respected and this high should be our target, right? So moving on to the daily time frame, here, we start having another series of, from this, when market has already tapped this daily, we start having a series of higher highs, higher low, higher highs, higher low. And what should we expect next? Another higher high like this. Now this is 4 hour time frame. And where did this market tap? This last drop here, where did it tap? It tapped an algo structure down here, and swept an SLQ, which is our liquidity, which is this guy. This chart is rough. Let me remove this daily drawing that I have here and focus more on the 4 hour. So this is the SAQ, which is swept, and market is currently reacting from this QMR right here, meaning that we want to look for more buys, and this is our target on the 4 hour. Guys, on the daily, this is our target, this high, and on the 4 hour, this is the high we're expecting. You can see how we're moving from the top to the down, right? Trying to look for our trade, because if we're trying to trade off with the daily time frame, we're going to find ourselves holding trade for too long. It depends on your target, which is one, and why we do it top to down is for us to be able to get to the lower time frame, so that we can be able to get a quick trade and not trying to hold trade for too long, right? So that is how we get it to this point, and this is what we have on the 4 hour. Our target is this high now, and here there's a trade which I called on my Telegram channel, but we didn't get tapped on the trade because my entry was too low and we get to miss the trade. And how did I came up with the trade? You can see that this side I'm currently marking was being breaked by a full body, and if you try to look here, you can see that we have a good swing structure which we should be looking at to trade off from. And let me remove this drawing of this 4 hour, and we're still on the 4 hour now. So guys, I trade mostly 1 hour, like where I look for my trade entry is mostly 1 hour, 4 hour, right? Sometimes I go to the daily time frame to really make sure that it's very correct, but I don't really. I also mark my entry with the daily time frame. It depends on how I say it, right? And now I'm currently on the 4 hour trying to mark out my entry, guys. I don't really pay attention to anything below 1 hour. Sometimes I get to share my trade with 30 minutes, but I didn't get my trade with that 30 minutes. I simply analyze it with 4 hour or 1 hour and just share with 30 minutes, so that I can be able to zoom it more for my channel people to be able to see what I'm marking at and what I'm trading. So that is why I simply go below that, and I don't really do that. I don't really trade lower time frame. So now this is the swing structure we have here, and this buy which I tried to catch, I called on my Telegram, was simply reacting from this algo structure right here. And why did I miss the trade? It was 31st, and I already said that I'm not going to trade anymore that year, that last year probably. And I had my entry below here, trying to say that this last low
here should be taken out. That is why I missed this nice trade. But I didn't know that the trade had the 100% chance of playing out because I have everything that I want. I have this sweep right here giving me the swing structure for me to watch out my trade from. And I'm trying to say that this low should be respected. And there's a very good algo structure lying here for me to call this trade a good trade. And the SLQ of this trade is this guy, and this is called a type 3 setup. We're not talking about it because you guys should. I'm not sure you guys even know about the type 3, type 1, type 2, type 3. So I was only waiting for this load to be taken out, and it's just a little bit more move for me to get the trade, but I missed it out. But that's not really why we are here. So let's focus more on what we're trying to explain here. So going down to the 1 hour time frame, I've already got my analysis with the 4 hour. So waiting for this, coming down to this 1 hour is just for me to like take a deeper look of what I'm trying to trade, guys. That is just why I should come down to the 1 hour now. You can see my analysis has already been done with the daily and 4 hour, and I did not even come down to the lowest time frame. And guys, let me show you something now. Let me go to the 5 minutes and try to show you why these 5 minutes lower time frame are so noisy, and you should try to avoid it if you can. So if you try to watch the 5 minutes time frame, let me say you trade 5 minutes time frame, you could have said that this is a drop. You want to call this a lower low, a lower high, a lower low, a lower high, a lower low. So next thing you want to say that this high should be respected because it's the last high, and you want to say that we should add a drop from this place, that this low high should be respected and another lower low should be created. Simply that you want to call this your swing break. You want to call this your swing break because it is simply a full body break that happened here, and trying to use the 5 minutes alone to trade like this and calling this your SLQ, which is your liquidity, and try to call this your QMRO and try to sell off from here because you're trying to look only the 5 minutes and say this is a structure leading to the downside. And from here, you can see that market has already tapped the 4 hour QMR zone where to buy off from, and you can see how market has already tapped here and is moving to the upside because with the higher time frame we already see that market is on a bull run and want to continue like that. So using the 5 minutes, you can see how noisy it is, giving you multiple entries which have 60% chance of failing because it's so noisy. You should not even be paying attention to it. You need to focus more on the higher time frame because with the higher time frame you get to trade less, you get to wait for quality setup and not trying to use the lower time frame which give you multiple trade, and it makes you trade multiple times, which is one, you over trade, and two, you get to lose more money, right? That's what the lower time frame we always do to you. So if you're the trader that really wants to stay disciplined, you want to trade 3 times in a week, twice, or even one, depend how, you don't need to even rush the market, right? You just want to like wait for that quality setup. You're not trying to give your market your money. You're trying to like try make out money from it, right? So you really want to like make sure you avoid all the stuff that really make you give market your money. So trying to use the lower time frame, you get to have these multiple setups in a week. You can even have up to 10 setups because you're trading just lower time frame. You have to start seeing multiple of this stuff which are not necessary. But with the higher time frame, you focus more on the quality setup, knowing the direction of market, waiting for that quality setup. Your SLK should be well valid, your break should be well valid, your swing structure should be marked out well so that you know the low that needs to be respected and the high that needs to be taken out, guys. So I focus more on the higher time frame and I never go to the lower time frame to listen to all this noise. And let's go to another pair. I want to show you guys something. Sorry guys, this setup here is no longer valid because the move have already happened, which is I just mark it because I'm just showing you what I marked out, trying to wait for it, but eventually missed the trade. This SLQ here, this was our SLQ, and this is our QMR, which the trade moved up from, and this is our low that we need to be respected. So normal, if you be following me for a while, you know I'm a 1 to 2 trader. I'm not trying to be greedy at the market. I just want to make my money and move out from the market and look for the next possible trade. So if I virtually call this trade, I could have moved out from here, guys. So let's go to another pair. I'm trying to show you something else. I have an analysis on this USDTPY, guys, and let me show you guys something. You can see I'm already on the 4 hour time frame. You can see how I analyze. I'm always busy at the chart. I try to study more so that I can trade easy. Guys, there's something that happen here. Sometimes when you have a break and you already have that swing structure, sometimes market do not return. Sometimes it do not give you that KM arrow for you to wait for trade. Example, let's use here as an example. You see that we have this break right here and we do not have an SLQ, neither a good QMR to wait up for trade from. And next thing we saw that market didn't even return. Markets after this break, market did not even return after we have this swing structure to watch out for. Market did not return, and next thing you see market pushing to the upside, and another high was being taken out. So you want to be active, you want to follow the trend of the market, you're not trying to force trade down, you want to follow the trend of the market. So when you have another break, this is simply done with the higher time frame, not the lower time frame. With the lower time frame, you could have multiple trades right here. You might have multiple breaks, and you're trying to call it your swing break and trying to trade off from it. And that shouldn't be how you trade. You want to focus more on the higher time frame. And with the higher time frame, now with the 4 hour, you see another break. We know we have a QM arrow right here. You mark it out, you can see that market did not even return. The SLQ wasn't did not even get swept before market pushed to the upside and taking out another high. That is why you did not see me mark anything here. And here the market has this SLQ. It was being swept, and we have a QMR down here. Market did not return to it, but it swept the liquidity and pushed up immediately. You need to be cool with it and not trying to, when you start seeing liquidity being swept and you're trying to start entering a trade. If you start entering a trade like this, you get to have this bigger stop loss that will make you hold the market for too long, trying to make up to your RR depending on how many RR you make on the trade. So you always want to be so patient and wait for your PMR depending on how you mark it. If it's in the week that you mark that, or you used to mark out the full body of that your QMR, depending on how you do it, guys. So after this, you see that market did not return to it, and we have another push and another break, and you can see how this guy returned down to this QMR very well, and market tapped on it and he had a buy. And I didn't catch this trade, but the next one, which is this one right here, I called this trade and I called it on my community. We made money together and was out of the market. Even with this move, knowing that this market is heading to the next high, I do not used to hold trade to that high. I simply just do 1 to 2 and I'm out of the market. That's just simply how I trade. But this year, I might try to look more if I can start doing 1 to 3 RR, depend on how I see the trade. But I'll always focus more on this rule of 1 to 2 RR, guys. Depend on how I see the trade and knowing if it's going to give the trade or even more, depending on my appetite and how I want to hold the trade and how the trade looks to me. So the next trade that I have here, I already had my swing, which is this guy. My SLQ is lying pretty well because my Fibonacci, which is already here. Let me draw it again. My Fibonacci like this, you can see my liquidity is sitting pretty at a 50% of my Fibonacci level, guys, and my QMR is nice there. And for me to call this trade invalid is if this high is being taken out, right? And you can see my liquidity has not been swept. One reason why I should be more patient to wait for this trade to still come down, except this high has been taken out. Once this high has been taken out, I just need to follow the trend and look for my next trade up here after this high has been taken out and not try to wait anymore for this trade down here, guys. So let's go to like 15 minutes and try to look at this trade to know if this noise that always happen on the lower time frame will be showing you a trade down there for you to be able to jump on. Okay, guys, I think I'm seeing something right here. Imagine on the lower time frame and you already know the market is buying like this. Let's say you call this a first break and this should be your second break right here, right? Let's say you call this your second break right here, and you already say that this is your swing structure like this, and you're waiting for market to return down, and you want to say that this is your QM arrow down here, trying to call this your QM arrow down here, and saying that this is your liquidity. Let's use the Fibonacci and even know if this liquidity is even correct. Imagine if Fibonacci is even saying this liquidity is not correct. One reason not to even use this lower time frame to even think of buying from here. And with the higher time frame, you can see that our SAQ has not, our liquidity has not even been swept. This is our liquidity that we have on the higher time frame, and we need to always wait for it. Imagine trading from here. You have a lot of trade to take, giving you over trading and losing more money even if you make money with the lower time frame, guys. So the best way for me, the way I prefer to use lower time frame even if I don't do it, is, let me say in a scenario when market has already tapped into my 4-hour QMR zone, I want to come to the lower time frame like this and try to look for a QMR down. Let me say immediately we have this tap like this. Let me remove this guy. Immediately we have this tab here, and we try to look for a QM arrow down here for us to catch the trades, for us to have this smaller stop loss and a higher time frame target. We should give you a higher arrow and a smaller stop loss. So down here, let's take a look if we can have something. Let's say we have this push to the upside down, push. There wasn't a break for us to even try to use down here to trade. But imagine, let's assume that you already have this tab and you're trying to like call this your next place to trade up from. Guys, I don't even want to talk about this 15 minutes, but I'm just showing you just for you to get it up on your higher time frame and then come to the lower time frame and try to look for the same QM arrow which you saw with the higher time frame. Look for it on the lower time frame, and that your zone where has been tapped, and that is how it's best. The way I trade, that is how best you should consider using your lower time frame, guys. But like you already know, my lowest time frame is 1 hour, and I'm cool with it. I'm cool with just fixing my limit order and just hold the trade. See, it plays out and give me my RR, and I'm out of the market, guys. So guys, that is just it. I give you one example of 15 minutes. I think I also did with the other one, guys. So guys, that will be the end of this video. Thanks you for watching. Don't forget to subscribe to my YouTube channel, turn on the notification bell to get notified when the next time I drop my next video. Tell me, don't like the video, comment, tell me the next video you love me to drop, and I will gladly do that. Thank you guys for watching. Peace out.